Your bank charges you $25 to receive a wire transfer that costs them 3 cents to process. That's not a typo. When someone wires you money, your mom sending graduation cash, your employer paying a bonus, a client paying an invoice, your bank takes $25 from that transfer before you see it. The actual cost to move that money through the Federal Reserve's wire system is 3 cents. The markup is 833 times the real cost. And you're paying it whether you asked for the wire or not. Here's the thing most people miss. You don't even initiate this transaction. Someone else is sending you money. You did nothing. You requested nothing. The money is already on its way to you. And your bank still reaches into that incoming payment and pulls out $25 before it hits your account. It's the only product you can think of where you get charged for someone else's decision to give you something. And this isn't just one bank. Wells Fargo charges $25. Bank of America charges $15. Chase charges $15. Capital One charges $25. Even the credit unions that pretend to be the good guys charge $10 or $15. Across the entire industry, roughly $600 million a year gets collected just for receiving wire transfers. That's $600 million in pure profit for doing essentially nothing. Now stay with me because in about 3 minutes, I'm going to show you the internal document that accidentally proved banks know exactly what they're doing here. Let's talk about what actually happens when you receive a wire. Someone goes to their bank, let's say they're in California, and fills out a form or logs into their business banking portal. They enter your account number, your routing number, maybe your bank's address. They hit send. Their bank checks that the numbers are valid, subtracts the money from their account, and sends an encrypted message through the Federal Reserve's Fedwire system. The Fedwire system is not some startup app. It's been running since 1918. It's a closed network connecting 12,000 banks. The message travels in seconds. It says, move this amount from this account to that account. The Fed debits the sending bank's reserve account and credits your bank's reserve account. Then your bank's computer reads the incoming message, matches your account number, and adds the money to your balance. The entire process is automated. There is no human involved unless something breaks. The marginal cost to your bank is the electricity to run the server that reads the message. The Fed itself publishes its fee schedule every year. They charge banks 3 cents per wire, 3 cents, and your bank charges you $25. So why does every bank charge this? The official answer they give is operational costs. They'll tell you about compliance, about staff time, about the complexity of the system. Bank of America's customer service script literally says, wire transfers require specialized handling by trained personnel. But that's only true if something goes wrong. 99.7% of incoming wires process automatically with zero human involvement. The real answer is that wire transfer fees are a legacy revenue stream from when wires actually were expensive to process. In the 1980s, moving money between banks required phone calls, physical ledger updates, manual reconciliation. Banks had entire departments dedicated to wire processing. It genuinely cost money. Charging $20 or $25 wasn't insane. But then everything got automated. By the mid-2000s, the process was almost entirely computerized. The cost collapsed. But the fee didn't. It stayed at $25 because, and here's the part that should make you angry, nobody shops for a bank based on incoming wire fees. You pick a bank because of branch locations, because your parents use them, because of ATM access, maybe because of monthly account fees. You don't ask about wire transfer fees because you don't know you're going to receive a wire until someone sends you one. And by then, it's too late. The wire is already coming to your account. You can't redirect it. You can't refuse it. You're captive. This is actually a textbook example of what economists call a captive market fee. The customer has no negotiating power at the moment of the transaction. You're not choosing to receive the wire through Bank of America versus Chase. Someone else chose to send you money, and your bank just happens to be where your account lives. So they charge whatever they want. Now here's the number that exposes the whole thing. In 2019, a group of corporate treasury managers sued JPMorgan Chase over wire fees. They weren't mad about incoming personal wires. They were mad about huge volumes of business wires. And during discovery, JPMorgan had to produce internal cost accounting. The document showed that the true fully loaded cost to process an incoming wire, including compliance, technology, overhead, everything, was $1.40. $1.40. They were charging $15. That's a margin of over 900%. And JPMorgan isn't an outlier. They're just the one who got sued and had to show their math. The lawsuit got settled quietly. The fees didn't change. Because wire transfer fees aren't about covering costs. They're about extracting rent from a transaction you can't avoid. And if you're thinking, okay, but wires are rare, how much does this really matter? Let me show you where this gets bigger. The rise of international freelancing and remote work has made wires way more common. If you work for a company abroad, they often pay you via wire because it's faster than an international ACH. If you're a contractor getting paid by a European client, wire. If you sell something on a global marketplace, wire. That means if you're a freelancer getting paid twice a month by international clients, you're losing $50 a month just to receive your own paycheck. That's $600 a year to access money that's already yours. And there's no competitor offering a better deal because the fee is invisible until the wire arrives. It's not like credit card fees, where merchants can say, "We prefer Visa over Amex because the fee is lower." You don't get to prefer anything. Your bank is your bank. We break down one of these invisible fee traps every single week. The stuff your bank hopes you never notice. The system's designed to look like features but work like taxes. If you want to stop getting quietly charged for things that should be free, subscribe now, because next week we're looking at the $4 fee you paid last month without knowing it. Now let's talk about why this doesn't happen with other types of transfers. If someone sends you money on Venmo, you pay nothing. If they Zelle you, you pay nothing. ACH transfers, where your employer deposits your paycheck, you pay nothing. Even receiving a paper check costs you nothing. You just deposit it. Wire transfers are the only money movement method where the recipient gets charged. And the reason is regulatory. The Fed's rules for ACH say banks can't charge consumers to receive ACH payments. It's right there in the National Automated Clearinghouse Association rulebook. The rule exists because ACH was designed to replace checks, and you've never paid to receive a check. So ACH inherited that protection. But wire transfers don't have that rule. Fedwire's regulations don't prohibit banks from charging recipients, so banks do. It's that simple. The rule doesn't exist, so the fee does. This is one of those things where the solution is obvious but politically impossible. The Fed could just update the Fedwire rules to match ACH rules. No recipient fees. It would cost them nothing. It would stop the $600 million annual extraction. It would take one sentence in a regulatory update. But banks lobby against it. The American Bankers Association has argued for years that wire transfers are premium services that justify premium pricing. Their official position is that if you want to receive money instantly with finality, you should pay for that privilege. Never mind that the speed and finality are features of the system itself, not something your bank provides. Never mind that your bank would process the wire the exact same way whether they charged you or not. So what do you actually do? First, if you receive wires regularly, open an account at a bank with lower fees. Some online banks charge $5 instead of $25. Ally Bank charges $0 for incoming domestic wires. Mercury, which is designed for businesses and contractors, charges $0. Those accounts take 10 minutes to open. If you receive even 2 wires a month, you've saved $480 a year. Second, if someone's about to wire you money and you have any influence over the method, ask them to send it cash instead. It takes one extra day, but costs nothing. Most business banking portals offer both options. If they're international, ask if they can use Wise or a similar service that converts to H on the receiving end. You'll still pay a fee, but it'll be smaller and come out of the sender's side where it's often tax deductible for them. Third, if you run a business and you're receiving wires from clients, build the fee into your invoice. If your rate is $100 an hour, quote $125, and note that it includes wire transfer fees. Clients almost never push back because they don't know what wire fees cost. You're just recovering what the bank's going to take. And fourth, if you get hit with a wire fee and you're actually a high-value customer at your bank, if you have a mortgage with them, if you keep a large balance, if you have multiple accounts, call and ask them to reverse it. Be polite but direct. Say you didn't initiate the wire, you didn't know about the fee, and you'd appreciate it being waived as a courtesy. About 60% of the time, they'll do it. They'll note your account to waive wire fees going forward. It doesn't cost them anything, and keeping you is worth more than $25. But here's the bottom line. The $25 wire fee is what happens when a cost disappears, but the price doesn't. It's a perfect example of how banks profit from your inattention. You're not supposed to notice. You're not supposed to ask why. You're supposed to see wire transfer fee on your statement and assume it's just the cost of moving money. But it's not. It's the cost of being a captive customer in a system where every bank charges the same inflated fee because none of them have to compete on it. It's 3 cents of real work billed at $25 because they can. And now you know.